All right, welcome back to AI4 2021 Finance Summit presented by Data. Our next panel is titled Risk Management's AI Evolution. Please join me in welcoming our panelists to the virtual stage.
All right, let's jump in. Big welcome to the stage, Mira, Agus, and Roey, and my name is Salah. We have a fascinating panel for you. It's all around the risk management evolution and how risk management has changed. If you go back to the 2008 crisis, banks were up to some interesting activity pre that, right? And so we had to kind of fix things, clean up our act, and the regulators helped us along the way. And capital R, risk, and then capital M, management, was a big focus. And the focus was around 3 lines of defense, 1, 2, and 3. Just like trench warfare, right? You had to kind of pass the first line, the second line, and the third line, and you had to breach all of those for there to be an event. And the first line is all about how the frontline units, the businesses, basically need to own risk. Don't make mistakes. So if you're issuing credit or you're making trades, make the right decisions, include risk in your decisions. And then you had risk management, which was the second line of defense, reporting to the CEO, whether it's credit risk or liquidity risk or model risk. And then you had the third line, which is audit. And audit's all about making sure, monitoring the first and second line. And that's how risk management basically evolved over the last 10 odd years. And this is what we're gonna talk about. So let's move into the, apology. Let's do a quick round of introductions. And I'll start myself first. My name is Salah Khawaja. I've worked on Wall Street for 20 odd years. I started off at Deloitte in management consulting and spent 10 years running transformation projects, primarily in the risk space, and then moved to JP Morgan and did the same for about 5 years there. That actually took me out to Tokyo and Hong Kong, had a great Asia experience. In the last 5 years, I've been running an automation team, including AI, in risk management at Bank of America, having a great time. So that's a bit about me, and our esteemed panelists. August, we'll start with you now.
Agus Sugianto, I'm the head of corporate model risk for Wells Fargo. I oversee all the model that's in production for Wells Fargo.
Thank you, August. Mira, you're up next.
Thanks, Salih. Mira Das, I work for BMO Financial Group. I lead the AML modeling and machine learning group, where a lot of the work that we do is implementing machine learning solutions for financial crime problems and other in several business areas.
Thank you, Mira. Roey, over to you.
Hi guys, pleasure to be here. So I'm Roey, I'm BeyondMinds CTO and a co-founder. BeyondMinds is an AI solution provider. We're working with top global 2000 companies in financial services and insurance, solving core problems alongside AML, fraud, risk elements, lots of automation, lots of very cool AI projects, and looking forward for the panel discussion.
All right. Thank you, August, Mira, and Roey. All right, Patricia, let's get into this and let's tee up the first question. So the first question is, since the 2009 financial crisis, how has risk management evolved? So August, we'll go to you first, and then sure. Mira and Roey, feel free to add some thoughts.
Sure. So for sure, the banks since then, with all the introduction of regulation becoming very strong in the capital management in particular, in the risk management and capital management in particular. So as you can see, in the current crisis, banks coming out very strong in terms of the capital position. I'm going to speak very specifically on the model risk. How do we manage model? It's day and night. If we look at how we manage model back then, which part of the problem in 2009 crisis was model, part of the blame in there, to today. So with the introduction of SR 11.7, OCC 11-12, all the banks have a maturing model risk management program and process. So we've been more than 10 years now in that journey. So models are very well managed, particularly for large banks. So that's a humongous difference. So when we're coming to this COVID-19, everybody knows, very transparent, how to manage model, very, very well prepared. Because all models are wrong, and many of them are went wrong during the COVID-19, but all the banks manage model very, very, very well.
Hey, August, some great points, right? And just to kind of draw a parallel, Microsoft created a chatbot, and when people started interacting with it, they said it sent some wrong signals, and humans being humans, the model started becoming racist, right? So those are the things that we in banks want to avoid, right? When a COVID-19 like event happens, you've got all these anomalies coming in. How do you retrain the models? How do you look at those anomalies? And then capital planning, I think you're spot on, right? There's such an amazing focus on capital management, just to make sure that if you think about the 2008 crisis, how banks had to be bailed out by the government, right? And now we have enough capital, enough buffer that in the event of a crisis like COVID-19, we basically have enough buffer in place. And there were additional tests, especially some of the big banks like ours, Wells Fargo and Bank of America. We had to do additional tests over the last 6 months to ensure that the safety and soundness of the financial system. Mira, any thoughts on that?
Yeah, I mean, I echo both of your thoughts, especially around the governance aspect of what Angus mentioned, which was around the lack thereof of much governance around risk management programs. And, I think beyond that, I think having a plan is important, but then also being able to execute on that plan, because just building on the whole COVID-19 and really the technology that we all use, certainly one aspect is making sure that, yes, you're prepared from a model perspective, and everything can certainly run from a model perspective, but then also ensuring that your technology, your systems and everything, when your entire workforce goes remote, certain other aspects of risk management then really came into the limelight, right? Because things like, having continuity planning and things like that were sometimes a checkbox exercises, for most risk management programs. But now I think, given what we've seen in the last year, it takes on a little bit more importance there. And then I also think from a capital perspective, yes, I mean, in terms of your exposure in certain industries, given what's happening right now in our economies, and, depending on what, where your bank is at in terms of your exposure, that will have a huge impact on your risk management program as well. So I think all of those aspects, I think beyond model risk, and you look at general risk management, come into play, since 2009.
Yeah, great points, Mira. You're spot on, right? Let no crisis go to waste, right? Coming out of the COVID crisis, we had to do so much, right? Working from home, digitization, model risk, etc. Great points, Mira. Roey, over to you. I know you run a pretty big AI team at BeyondMinds, so would love to hear your perspective.
Yeah, definitely. So, I wasn't really around in 2009, but what I know about crisis in history, that's when a crisis is a opportunity for change, growth, adopting new technology. And I think, we are in the fourth revolution, right? It's all about data. It's all about what to do with this data. Data is all around. And definitely since 2009, we saw like significant change in way companies, banks, financial institutes are collecting data, using data for better decision, for better monitoring. And I think we will touch that in further on in the panel, but in the AI aspects of what we currently see in this crisis and since 2009 is that it's about evergreen AI, right? How we are bringing AI into current risk management that is robust, stable, even in when severe changes appear, when the environment is changing. Think about the data change and shift that happens since this crisis started. Like this data shift and change will ruin any known trained model that was based on previous data. Now, can you adapt to this new trend, new data fastly in production, monitoring, and be able to even to alert the users, the data science team, the AI teams that something is changing? So I think, it's all about change. From 2009 till today, we saw a lot of change. We still experiencing significant change. And with AI and data and technology and process, it's all evolving, and it's definitely bright future, although we are witnessing a crisis while we speak.
Yeah, Roey, great points on the data front, right? I think sometimes this analogy works and sometimes it doesn't. How data is fueling AI, right? And you know the data that series that was there before COVID, you know, you trained all the models and suddenly the series completely changes and it throws everything out of whack, right? And that actually tees up the next question, Patricia, when you get a chance, if you can move there. You know, what challenges does AI present to risk management, right? And Roey, maybe I'll come back to you from a data perspective, right? That what are you seeing, you know, when you're building out your product and your platform, your vantage point? I know you're focused on financial services and the insurance sector, you know, whether it's data or just other challenges that you see from a AI perspective and how, you know, it's hindering some adoption or even kind of that hockey stick, right? How will it take off?
Yeah, well, there are so many challenges around AI and specifically around risk. But I don't know, just few on top of my head on that is, so of course you have explainability, trust aspects, bias aspects, how you predict the confidence and uncertainty of models, how you combine human in the loops, lots of different technology aspects that need to come into place when you're deploying and take AI into production. So it's definitely not about let's collect data, train an amazing model in the lab, get to 95% accuracy and put it in production, right? That doesn't work. And I think the ecosystem is evolving and companies are more and more aware of that, right? It's not about, okay, let's build a center of excellence, bring 100 PhDs in AI and they will solve our models. I think there are a lot of challenges. For example, recently I read a survey talking about that for every $1 that is spent about building models, there are $100 that are spent on deploying, maintenance, updates, operation, right? This is the big area. This is the complex. And another challenge maybe that I recently hearing a lot from clients and FS is around the reconciliation, which is a nightmare, right? So many different systems, data is spread. Even if we're progressing around maturity, still there are so many different systems. The data is messy, is complex. How to harvest the real value with AI from this data is a challenge. And I think around that, maybe touching one last point around management aspect of that, strategy on how to use this data, how to invest in fundamentals, in systems, and even buy versus build strategy is not very clear today. And I think there is a lot of way to accelerate this adoption, this transformation for a better process.
Yeah, Roey, spot on. I mean, data is a massive challenge, right? It's so much disparate of infrastructure. You got gaps in data, and how do you bring it all together? And then you build the models, like you said, $1 and $100 come in terms of implementation. And then I think all of our organizations are very responsible organizations, right? We're not Facebook. We don't move fast and break things. We take the responsibility and the trust that's given to us around basically having people's money seriously, right? We don't want to, break things. And as a result, you want to make sure there are organizations like Model Risk, and August would love to get your thoughts on, how that plays in, right?
Yeah,
make sure that that trust that's given to us, we take it seriously.
Absolutely. Thanks for that question, Saul. I think I want to bring it a little bit very basic in terms of model risk, right? We know all models are wrong, all AI are wrong. And when they are wrong, they create harm to the institution or they create harm to our customer. So understanding the potential harm and unintended consequences is very important. And then from there to understand what is the cause, what is the root cause of harm so we can manage it. That's very important. We talk about data. We start from the data piece. Data is a uranium. If you don't manage it well, it's radioactive here. It will hurt because of privacy issue, because of data security, information security. So data can be radioactive. Yeah, it can be useful and very powerful, but it can have a radioactive effect as well if we don't manage it well. So start from data because of privacy, info security, and bias coming out from that data. Then we're talking about the model itself. The model, unlike the traditional model, that's very, very interpretable. We're talking about model that's very, very complex. If we're talking about deep learning, we're talking about using ReLU deep learning. It has 1,000 and million local linear equation inside there. So how we train them, the parameter is depend on the choice of hyperparameter. So it's a complexity of that. And then with that complexity, the environment changed. The COVID-19 taught us a lot of that, right? Suddenly things change. How do you manage a complex system in the changing environment? So I think that is something that we care about. So we have to manage all the aspects from data, from the modeling, from the parameters, from the environment, and how we're going to retrain it and change control, and all of these things that are becoming the challenge becoming much bigger than the traditional model.
Yeah, love the analogy of uranium, right? How it actually can fuel something and it can be used for good. And then it's got this other side, which basically, the radioactive side, right? So you got to basically balance it really well. Mira, any thoughts on that from your vantage point and BMO Group?
Yeah, I mean, I'm going to speak a little bit from the perspective of financial crime, where, when machine learning and AI sort of made its debut in this area, everybody thought it was going to be the huge David that was going to kill the false positive Goliath, right? And in certain cases, yes, I mean, it has given a lot of, optimal output from what you need to look at. However, what a lot of people don't look at, and I know Roey kind of touched on this from a deployment standpoint, when you're looking at your operational teams and they're looking at the interpretation and the output of these models, you can't underestimate the change management aspect that goes into changing from a traditional or a model that they're used to looking at to what they're going to be looking at. And when you start getting into tons of features that a lot of these models are based on, the learning curve and what occurs as a result of that, and whether or not it really is a time savings, there has to be a lot of thought that goes into whether or not it's worth even putting in a machine learning or AI model sometimes, because it's not as simple as, hey, we're gonna kill all your false positives, but hey, we're gonna double or triple your caseload, where your operation cost then goes through the roof. Right. And, there's things like that where you don't necessarily consider it from a model perspective, but more from the operation standpoint. So I think from that perspective, I think certainly there are a lot of challenges that we haven't not necessarily thought through as we deploy these types of models more and more.
Hey, Mira, great thoughts. And that kind of tees up the next question here, Patricia. And that's the question around which opportunities does AI present to risk managers, right? And if you kind of think about it, over the summer, we witnessed how, the Black Lives Matter movement, boiled over, right? And you think about decisions that banks have made over years and decades, and there's bias in those decisions, where if you were an affluent, white family, you might have gotten the mortgage versus not. If you think about even within white people, like if you think about CEOs, there are more CEOs named John than women CEOs. And even that, it's kind of like, hey, you got to be a certain height requirement. So if you're a short white guy, you get screwed, right? And so how do you translate that from a data perspective, where you've got AI first being trained and then eventually making prediction decisions based on biased data? So I guess the question that, I'm posing to you all, and feel free, whoever wants to jump in first, which opportunities does AI present to risk managers?
I can start. Go ahead, Mira. No, go ahead.
So I was gonna say, from a responsible AI perspective, and I think we've all heard that term really thrown around the industry, which is around understanding how traditional models, doesn't matter the modality of the model, you can have bias depending on what your input is going to look like. And I think it's important to have frameworks depending on what the output of those models are used for, in terms of how some of those input features are going to impact your models. And again, this goes back to model risk, where it's not just about, leaving it up to the business in terms of what variables you're going to use, but understanding what that impact is going to be from a reputational risk perspective, and really an impact to your customer risk, right? Because if, to your point, I mean, if certain types of variables are used from, even something as small as a zip code would have adverse effects if you're looking at adjudication type models. And it's just built into the bias of just how those, really those neighborhoods and how, basically diverse they can be or not be. So I think where the opportunity lies is that, we have the benefit of history. We know what went wrong the first time around when some of those models were being built. And really, we should be able to address that in a much more responsible and manner when we're deploying the models these days.
Yeah, Mira, spot on. I know Bank of America, we believe in responsible growth, and we throw around responsible AI, right? You want to have the guardrails in place. And maybe, August, you were going to go there in terms of model risk. You got to put the guardrails in place. You don't want the model to veer off, right? So August, would love to get your thoughts.
Yeah, first of all, I would want to talk about the opportunity first. Yeah, banks have been using model for years, particularly managing the financial risk. The opportunity is now we also able to apply model, particularly on the unstructured data, be it mainly on the natural language processing side. So the opportunity of dealing with non-financial risks, so managing better non-financial risks. So humongous upside on that. And then I'll talk about the model risk a little bit later. But we also, the opportunity is we're dealing with arm race of model. So Bank of America, you use model. BMO, you use model. Wells Fargo, we use model. So it's an arm race of model. It's the effect of if you don't the adverse selection. If you don't have the best model, you have adverse selection. The less desirable one will come to you if your model is not sophisticated enough. Be it in credit, be it in fraud. It's the situation is like that. So it's an arm race of model. So we have to compete with model. Secondly, we are against increasingly very sophisticated machine learning adversarial environment driven by machine learning, particularly on the cyber and fraud. So we are competing with the bad actor that are using machine learning as well. So we have to do that. The rapid evolving strategy, particularly probably on the dynamic pricing and all of those things. So the opportunity to create helping to create strategy real time through reinforcement learning, and then with a lot of information out there, humongous exabyte information every day. How to make sense out of that, and looking for the needle in the haystack. So that kind of things, it's an opportunity. But after saying that, though, three things that I want to look at in terms of model risk, managing model risk. So first, of course, when you're talking about responsible AI, we need to start with the interpretable model. So a lot of people talk about explainable AI. Sometimes I have to bite my tongue because the explainability tool can be very complicated. It's not easy to explain. So we need to look at interpretable machine learning, not only explainable machine learning. So we work a lot on that. We published a few papers on how to do sophisticated machine learning that's interpretable. Second is model robustness or adversarial operating under adversarial environment. How do we know our model will be fail? How do we know in traditional model it's very easy to understand. In this situation is a lot more complex. So how to test model for robustness when environment change? In credit model, we cannot retrain model all the time. It has to stay through time. So that's because credit, as you originated now, is going to go back during the crisis. So having robust model is very important. And then Mira talk about the fairness aspect, right? The fairness and the ethical aspect. Do we want to apply it if we know the data is not is a lot of bias in there, or should we even do it?
Yeah, great points, August. Roey, over to you to add some thoughts.
Yeah, so I think Agus touched some really interesting points. I see the main opportunity around credit risk and probably around AML. In terms of use cases, what AI can really offer around risk management. I think AML is an amazing opportunity. And actually, I'm not sure what's the situation in Wells Fargo or Bank of America, but industry-wide, I see false alarm rates as around 90%, right? How do you deal with 90% false alarm rate? How many alerts this team should get in order to really find the right alerts, what should be investigated, what should be reported? It's a really complex scenario, and I won't guarantee on that, but I would say that AI for sure can cut that by half, right? And probably more. But of course, it's involved some risk taking in order to reduce the holistic risk in AML, right? And I think today with 90% false alarm rate, with a lot of rule-based mechanism, we are taking a significant risk around AML, right? It's not only about
Roy, probably my question to you, you're talking about 90% of the false positive, right?
Yeah.
Now we're talking about false negative. Okay, let's part for the because at the end of the day, AML is a false negative. Okay, if you're asking model risk guy like me, number one is false negative. False positive is your problem, business problem. Okay, so false negative. So now we're asking BSA officer to commit. How much false negative can you accept? And how do you know? Then you have to do below the line testing. I think AI has opportunity to do that because below the line testing today, a lot of manual laborious activity in the AML world. If your model risk asks you to do below the line testing, that is something that we don't catch. So how do you sample it? And with rare event, so the below the line testing is humongous. That's then you require army of people to do manual work. So what can AI do? Not only to address the false positive, but addressing false negative, particularly on the below the line testing.
Well,
one second. So of course, false negative, right? It's an AI problem, right? It's never only about precision. It's also about recall, right? What is the right working point for the business in terms of risk, right? Of course, I can say that nothing is AML, and then I will be amazing in false. But seriously, it's all about the right working point, right? I don't want to miss any false negative, right? But we must reduce the false alarm rate, otherwise we can't really handle this amount of alerts, right? It's actually causing a risk of finding these opportunities, and I think what distinguishes AML from fraud, because in fraud we have seen like tremendous improvement in the last few years, but in fraud you have this feedback that coming back from users, from clients all the time, right? Someone blocked my transaction, someone didn't block my fraud transaction. But in AML, you don't have this feedback. But what you do have is years of history of investigation and reports that have been written, right? And you can use NLP to extract information from these reports. You can enhance the rule-based system with an AI layer that will sit on top of this rule-based. And last, of course, you need to employ an anomaly detection mechanism in order to detect what's never been detected before because it doesn't flow into the rules. I think on that, AI has an amazing opportunity to really bring a change. So this is a real opportunity. And with the amount of money that is invested worldwide around AML, giving the 1% that's actually being caught, I think we have a lot to progress there, definitely reducing risk for companies. And one last point, I think that credit risk is another amazing opportunity around underwriting, around automation, around aggregating more data, enhancing data. and you know how to more accurately do credit scoring, but how also look at this loan portfolio, increasing it, but still maintain a very moderate risk levels.
Can I be contrarian on that, Roy?
For sure, that's why we're here to discuss.
Yeah. So I think credit risk, if the way we do it today, it will be the least opportunity. This is the area that has been, we have quants that working on this, refining their craft for the last 30 years. So unless we introduce new data, unless we introduce alternative data, you will not get anything from credit risk because the constraint is so much. Some of the things, if we've just put the machine learning, throw it in the wild, yeah, you get improvement. Then you say, well, this factor has to be monotonic. Suddenly, your capability is gone. This effect has to be monotonic, gone. So if we stick with the current data, the impact of machine learning are probably almost nil. Yeah, very, very tiny. Okay.
So hey, let me mediate that a bit, right? I think the alternative data is a very interesting example, and let's think about like even climate risk, right? A massive new area that's going to emerge, and there's going to be a huge set of alternative data that's going to appear. I was part of an interesting project where you could be in the same zip code, same neighborhood, and the risk to the property is different because one property is higher, one property is lower. So suddenly you're going to have some of that data that's going to flow in. And when you're looking at credit risk, hey, should I give credit to the person who's got the house here or the house here? And what is my exposure? And what's the interest rate around that? And so I think it's going to be fascinating. And I think, like you said, I think, Augusto, you're spot on, right? The traditional credit risk, people have honed their craft and it's in a solid place. How much more lemon juice are you going to extract? But then you look at the alternative data and maybe some new things that will appear. And I think there'll be Gen 2, Gen 3. And time will tell, is it going to be just this much juice or a lot more, right? Fascinating.
I think if we can do it in the following the rule and the law, because this is a very regulated entity, right? So we have the Equal Credit Opportunity Act, right, and all of those things. A lot of rule that we have to play. So using the back to the responsible AI, using the data in a responsible way to provide more credit opportunity, not being discriminatory. So that's I think it's the key, and we are just starting on that in that area, but. That's I think that's the name of the game, because what's this machine learning really good at is really feature engineering, and feature engineering for data that we're not very familiar with. That's why in fraud is very successful, because things change very, very rapidly. Credit risk is a very, very different environment.
Yeah, absolutely. Go ahead, Roy.
But yeah, it's a fascinating discussion, and basically I agree, but I think there are so much data that is not yet being used, and I'm not sure we are ready to use it in terms of fairness. But I think the opportunity in credit scoring and AI and fairness is really to be much more fair than what we are currently be. I think AI can, I love the term segment of one, right? AI can really look at individual on the individual level without the need of buckets and segmenting and rule-based systems and the way currently credit scores models are built and used. Look at people in groups, right? Not on the individual level. And I think the technology is approaching there. I don't think that AI is totally there in terms of like generalization, that it can really look at the individual level, but it's going that direction, and it's going to be much more fair than human can ever be, which is an amazing opportunity. And I think one last question about comment about that is that if you will take human judgment and you will check agreement between experts, there is real opportunity to build an AI that will be more aligned with the majority than each individual separately.
Yeah.
And this is amazing in terms of fairness. Even if the bank won't earn more money because of a better model in terms of risk, it will be more fair, which is an amazing opportunity.
Yeah, Roey, I think that point on fairness is a good one, and actually leads me to the next question, which is, around which regulatory developments around risk management and AI do you expect in the next 5 years? And we talked about, transparency and explainability of the AI models, right? And fairness is going to be a big topic, right? Why did the model decide what it decided, right? Really digging into the root cause and showing that and driving the fairness. Because at the end of the day, humans also make mistakes, right? Humans get tired. So how can AI go above and beyond that? And I think, there's this whole concept of AI singularity where, the AI is going to go crazy. Not going to happen, because you're going to have smart people like Agus who's going to make sure model risk is there, right? And also you have to keep in mind that it's going to be always humans and AI together, right? Monitor the AI, find the exceptions when COVID-like events happen, or even minor events happen day to day, adjust the model, right? Feature engineering, etc., where you keep constantly, training or minute adjustments to make sure things are working. And from a explainability perspective, it's all good, right? So back to the question, right? What are the big regulatory things that you would predict? Like, look into your respective crystal balls, right? And oh, by the way, there's a bet on this, right? So I'm going to call you back in 5 years, and if you got it wrong, you're going to be in trouble. But jokes aside, look into your crystal ball, right? And tell us what you think.
You want me to start?
Go for it, Roy.
Yeah, so I actually don't think we need a crystal ball. I think that the Singaporean regulator already did most of the work. So I think there are seven rules that are still evolving, but they give very good baseline. So it's explainability, which is very straightforward. I think everybody is talking about explainability, although as a researcher, I'm saying that we're just playing with explainability. We're not even scratching the surface about really explaining the models. But that's a different topic. And then we have repeatability, which is super important. I think, Agus, you touched that. That's a super interesting domain, very active in research today. And I think it's very important. Then you probably have tuning and regular tuning, right? How you monitoring, how you adopt, how you change towards the environment, towards new data. And that's bring whole set of technology aspects and challenges to solve in terms of, okay, what I need really to train the models all the time with new data, how I'm going to do that. That's a whole set of challenges, but I think we're going there, active learning, etc. Robustness, open challenge, huge challenge, how to deal with noisy data. I think, when I'm trying to explain robustness to people, I'm giving a very simple example, right? You train a dog versus cat image classifier, and that classifier got an image of a giraffe, right? What will happen? And the truth is that the model, we said it's a dog in a 99% accurate probability, right? And that's, of course, a classic model in deep learning, right? Softmax probabilities doesn't mean anything. And building robustness is hard. You need systems. You need much more than models. To that, you need out of distribution detection and confidence estimation and different mechanism, how to combine human in the loop and what should look in a second judgment, etc. Then you have traceability. I think it's not a super well defined yet in terms of the regulator, but I think giving a decision making, data sets and process that yield the model decision and documents. You need to be able to trace this decision again and again. Auditability, right? You need audit, you need monitoring, you need to understand what's going on under the hood, and that one is reproducibility, right? I want to be able at each time to build the same model, the same aspect, and to get exactly the same result. And so it's like stable. So I think that's my 7 rules that I'm following. I think that it's a good start.
Thank you, Roey. Mira, over to you.
Well, I'd say, I mean, most of those 7 are pretty applicable regardless of whether or not you're using machine learning or AI, right? I mean, things around, being able to replicate your model results, being able to do back testing, those are things that were defined in really 2011-12, really, when you think about it. But I think a lot of where the regulators will sort of start differentiating what you can and can't do will come from self-learning models versus non-self-learning models. Because I think where they get a little bit more nervous is if you are taking over, pretty much the decision-making process of a human, end to end, right? Because one of the things I want to touch on, and this really touches on some of the stuff Roey was saying in the last couple of comments, was around, using AI to cut false positives. You can certainly build a model to cut something by false positives by say 95%. Good luck selling that to a regulator, right? And really the comments around that will be, and this goes back to what we were saying for model risk, is you might be cutting things that you don't want to see. What are you missing that you do want to see? And that's where the balance, the art, the risk tolerance really comes into play in terms of how that's going to work together, right? It's not just about the models, it's about how that model is working with the business. And once you look at that, that is where I think the regulators are going to focus. It's not just going to be on the technical aspect, it's going to be on, does the business understand what this model is giving you? Do they understand how this output is going to affect some of the impacts of the risk management that that model is doing for them? So I think that, in my opinion, is where the regulators probably will focus a little bit more versus look. I mean, don't get me wrong, you're always going to have certain groups within the regulators that are going to look at the details in the model. That is not going to go away. But how that is going to impact business and whether or not all the business stakeholders understand what you're doing, I think that is where they will focus a little bit more when you're implementing these types of models.
Yeah, great thoughts, Mira. All right, Agus, over to you.
Yeah, I probably want to talk a couple points. First is I'm expecting that the more regulation will be coming, but my hope will be, because everybody using machine learning, everybody using model, the regulation apply to everybody equally. So we have a equal playing ground, level playing ground, because that's not the case today. We cannot do, our banks, we will not do a certain things, especially for example, for targeted marketing. Well, in tech platform, there is a wild west. So I think when the regulatory is a new regulation is introduced, my hope it will be applied to all industry, not only certain things, because then we will have some arbitrage, loopholes, and all those things on level playing field. So today between fintech and banks need to play in the same rules. So I think that's a very, very important, whoever going to craft, whoever coming up with regulation, because it will impact everybody, impact customers. So I would say please apply to everybody. Secondly, in terms of focus, in my view, I spoke about this a little bit at the beginning, in terms of harms and unintended consequence of the model will do. So model safety, around model safety, that's something that we need to pay a lot of attention, be it regulated or not regulated, but we need to pay attention a lot on in that. And that's coming from all the aspects that I spoke before on the data, what data is allowed and be used and cannot be used, what data allowed to be shared and not shared, and all of those things. Those are we already seen it through GDPR and through the CCA and all of those things. So that will be more and more, right? The alternative data, what can we do? What can we use? How do we use it? So that's for sure it will be something important, because it impact model safety or harm. So I think that's something that I would like to highlight, in addition to what Roey and Mira already talked about.
Yeah, I think an interesting aspect about data, by the way, is okay, you have a list of data that you cannot use, right? It's not good to use this data, but can this data be concluded from the rest of the data? That's a rabbit hole, and that's an interesting risk. And definitely in around credit risk and credit scoring that I mentioned, but I think that's around bias, for example, right? I don't know, from looking at your transactions, can I conclude your age? Probably yes. And can we make sure that the model is not age biased, although it's clearly not using age? I say that yes as well. It's possible, and it's mandatory to do so. So I think it's becoming more and more complex when the technology is getting better and better. We need better and better regulation techniques.
But I think the challenge on the complexity is also people as well. As we go on this one here now, it's becoming very, very interdisciplinary area that before not get involved so much with the model. Now we have to. For example, right, our compliance partner, our legal partner, and they have to deal with increasingly more complex and sophisticated methodology. So I think that's something that educating, our compliance partner, our operational risk partner, our legal partner is super, super critical. I think that's I think how to look at it holistically and everybody into this.
Yeah, I mean, I think the threat vectors continue to evolve. That's for sure, right? And something we have to be very, very cautious of. Super fascinating session here. Agus, Roey, Mira, we talked about data, explainability, and how the rules need to apply to everyone. And then we are, I think, a responsible organization. This needs to transcend into the tech world also, and they need to apply smart algos, because we've seen algos run amok there, right? And some of the political turmoil that we face is, any engagement isn't good engagement, right? And we're not, stealing people's data, and we're not trying to monetize it. I think there was a fact out there that if you have a MacBook, you're better at credit risk, but then unfortunately MacBooks are, bought by a certain class of people, right? And so it's going to be very interesting how the guardrails are going to continue to ebb and flow. What can you use? What can't you use? And I think in the spirit of fairness, but again, super fascinating. And it'll be interesting to come back maybe in a couple of years here, Patrika, and have this discussion and kind of reminisce on what we talked about here and what happens in the next 2 years in terms of the crystal ball that we talked about. But Agus, Roey, Mira, thank you so much for being a great panelist here. And I hope the audience enjoyed it, and we'll stay connected. Thank you all.
Thank you.
Thank you
for moderating.
Thank you so much to all of our awesome panelists. This has been an incredible discussion, and a special thanks to Salah for moderating and keeping the conversation going. I too am excited to see how this all turns out in 5 years. So we'll meet you back here. All right, for the audience, it's time for you to make your way to your next session. Along the way, make sure to accept your connection request and check out our awesome AI exhibits. Thanks so much, and we'll see you around.